All right, so let's do something that I'm not real fond of, and that's preparing a statement of cash flows using the direct method. I don't normally do this, and I'm not sure what the point is exactly, but direct method is certainly allowed, and a lot of companies don't use it because they have to, even if they use the direct method, they have to they have to do the indirect method as well. So a lot of companies just save the time and don't mess with the direct method. But you could need a little bit of help on the direct method. And I will tell you, the way this particular exercise is set up, it's pretty basic, okay? Because all of the reconciliations for each of these items has already been done. And so all we really have to be able to do is to classify items as operating, investing, or financing activities. Okay, and so if we can do that, we can actually answer this question pretty easily. And this was done from a drop-down box type exercise in an online environment. And we just have a little screenshot here. So we always list these in a certain order: operating, investing, and financing activities. So we're going to start with that. And again, this is the direct method. So with the indirect method, our starting point for operating activities or cash flows from operating activities would be net income, but that's not how we do it with the direct method. So cash received from customers, all we have to do is come up here and look at our list and note that there it is right there. So we can plot it into the box here. Now we'll say this: if you were just being asked to, do this, and you didn't have this nice handy, you just had basically white space there, you'd have to know a little bit more. So it is important that you know and that you understand that cash received from customers, okay, in the ordinary course of business is an operating activity. If you don't know that, it wouldn't necessarily keep you from being able to complete this exercise, but if you just had to make a statement of cash flows from scratch, well then certainly you might have some difficulties. All right. So the next item we can tell what to look for because we've got cash received as interest, and so this is a learning opportunity. If you didn't know that interest was considered an operating activity, well, you do now. So we're going to plot that in there, and then I've labeled it up here, right there, as that operating activity. And then looks like we have to figure out one of these, and then they've given us another one. So let's do this. Let's figure out what cash paid as income taxes is. Cash paid as income taxes. So I'm going to put a 0 there, but notice now I'm not using the word received, I'm using the word paid. So I'm going to enter this one as a negative figure. And so now I actually have to know a little bit about operating activities. So I'm going to look down through here. Cash, right up here at the top, cash paid to employees and suppliers, $148,000. That is definitely an operating activity, so we're going to label it as such, and that was $148,000. And again, we'll want to put brackets around there. So net cash provided by operating activities, well, we've got $194,000 plus $6,000 minus 148,000 minus 11,000 for taxes. Generally speaking, if we pay something in taxes, most of those income taxes rather, most of that is the result of operating income. So that's why we go ahead and put it there. Okay, so that would be $41,000. And then they tell us that the next item is cash flows from investing activities. And again, this will be the second item on the statement of cash flows, regardless of whether we're using the direct or indirect method. Okay, so we look up here and we want to look at something. So we have cash received from the sale of land. So land can be an investment or it can be held as an operating asset. But because we're selling it here, we're probably going to be dealing with an investing activity. And since it's received, we would put sale. You know what? I forgot to do something up here. Let me go back here real quick. I forgot to do this. Cash paid to employees and suppliers. Forgot to do that. Okay, so that's what that is, and you can see that right here. So sale of land. Well, we received money, so this is going to be a plus. They've given us the second one, purchase of equipment, and this is assumed here to be a cash purchase since they put it in this section for us. So cash paid to purchase equipment. We're going to put an I there, but remember, we're paying it now, so we need to put brackets around there. Cash, net cash used by investing activities. They even help us out here by using the word provided and then used. Sometimes it's a provided / used, and then you have to figure it out. So let's see what we have here. 40,000 minus 89,000. Going to say that we used $49,000 cash on our as a result of investing activities. And then the third section is financing activities. And so let's see here. They've given us the issuance of some debt financing, bonds payable. So we can come up here and put an F by that. Okay, so anytime you see the word issued, issuance, issues, something like that, the money is coming in. All right, so $30,000, and we put the F up there by that. Acquisition of treasury stock. Okay, so this is a little this is a little heavy for where we're at. But what we're talking about is a company sells some of their stock and then they buy it back for cash. And so we can see that right here, cash paid to acquire treasury stock, 10,000. That's why there's a difference between, usually a difference between shares issued and shares outstanding, just in case you were wondering. Acquisition of treasury stock, so this is going to be a negative figure here. And then we're starting to run out of things, so let's see what we got. Cash paid as dividends, that is our other financing activity that they're looking for here. Let's see here. Cash paid as dividends, or something like that. Okay, and we paid 16,000, so that's going to be a negative figure. So let's clear out the negative 49,000 from the investing activities. We got $30,000 by issuing the bonds, and then we spent $10,000 buying back some of our own stock, and finally we paid out $16,000 in dividends to the owners. So we have $4,000 net cash provided by financing activities. Okay. Net decrease in cash. Well, let's see what we got. We're going to take the $41,000 from our operating activities minus $49,000 used by investing activities, and then we're going to add to that $4,000 net cash provided by financing activities, and we're going to end up with net decrease of $4,000. Again, they were very nice here, and they clued us into the fact that it was going to be a decrease. All right. They've also been nice. They've said, okay, cash at the end of the year. Well, we're running out of stuff up here, right? So we've only got beginning and end. So if end has to be here, then cash at beginning of year must go here. And that figure is $16,000. Okay, so that I'm not going to put anything here other than just a dash to indicate that I've used it. And then cash at the end of the year is $12,000. Well, this all makes sense to me, right? Because we started off the year with $16,000. We ended the year with $12,000. And we had a net decrease in cash of $4,000. Or we can say, conversely, that we started off the year with $16,000. We had a net decrease in cash of $4,000. Hence, our cash at the end of the year is $12,000. Okay, so that's all I've got for this little exercise on the direct method of preparing a statement of cash flows. One final caveat, again, this was a fairly simple exercise compared to some others you might see. All right, that's it.